Hi, Jonathan York, Bear Financial Partners, looking at investment markets. Really, this sort of ongoing banking crisis is really gripping equity markets at present. Now, in Europe, we've seen UBS take over Credit Suisse in a $3.2 billion deal. But in the US, it's really the smaller and sort of mid-sized regional banks that are really under pressure. And some of these banks are seeing their share price absolutely decimated over the last couple of weeks, going from sort of over $100 to trading below $10. And each time as the share price sort of falls, more and more depositors take their funds out of the bank, and then the bank comes under a little bit more pressure out there. And really all they're doing is moving them out of the smaller banks, going into the larger banks, sort of JP Morgan and sort of Bank of America size. This obviously all stemmed from a SVB, which really ran into some difficulties, and potentially there's a bit of an issue there because it looks like some of the regulators there might have been a little bit asleep at the wheel. But really, with banking, it's all about sort of confidence, and really, certainly in the US, you've got that FDIC sort of Federal Deposit Insurance Scheme that really potentially needs to be increased, and because if you've got sort of certainty on your deposits, then those deposits will stay in the bank, and then the bank remains a lot safer. And certainly that's something that is being discussed. Janet Yellen came out this morning, the Treasury Secretary, and came out and said that potentially they're sort of looking at that sort of issue. Now, obviously, what does this do for the Fed? Because again, Fed meeting this week, potentially we're looking at maybe a 50 basis point hike. I think that's off the table now with the potential sort of banking sort of issues at present, and potentially we just see a 25 basis point hike from the Fed. Really quite interesting because the 10 years back at sort of 360, the 2 years back around sort of just under 420 now. Now again, sort of 3 odd weeks ago, that was trading above 5%. All this sort of comes on the anniversary, just sort of past when the Fed first started hiking rates back in March the 16th, 2022. And since then, at every Fed meeting, we've seen a rate hike. All the time as well, obviously, you've still got the Ukraine-Russian war taking place. That's just ticked over the year mark now, entering its sort of 13th month. Interesting as well, presently in Moscow, President Putin and Xi Jinping are meeting to sort of discuss further sort of, potentially increasing the ties between Russia and China. And certainly in the international community, China is one of the few friends that Russia still has. Indeed, this week an arrest warrant was put out for President Putin, on sort of war crimes involving children. But obviously, in order to that to be enacted, he has to leave Russia, which there's no sign of him doing in the near future. Now, oil has backed off now; it's below $70 a barrel. Now, in the UK, you've got the Bank of England meeting this week as well, and potentially they're still looking at increasing interest rates. But again, it'll just be interesting to see the sort of pace of those hikes now, especially given the ongoing sort of banking issues that are sort of impacting global markets. Now, the ECB at their last meeting did increase their rate by 50 basis points to 3%. And I say, you've seen that sort of takeover of Credit Suisse by UBS, $3.2 billion. But potentially that does wipe out the bonds of Credit Suisse. That was around 17 billion. Also, as well, still got ongoing sort of protests in France as President Mitterrand has now sort of pushed through the rise in the retirement age from 62 to 64. Now, in Australia, the Reserve Bank did increase rates again by 25 basis points, but potentially looking at pausing in April now. But certainly what is helping the Australian economy, still net inflows of people coming in there. For February, around 60,000 people. And obviously that helps on the sort of housing front. They have to live somewhere, work, etc., and spending money in the economy, which is all sort of boosting the Australian economy. Now, here in New Zealand, it will be very interesting to see what the Reserve Bank does at its next meeting. Potentially another 25 basis point hike is on the cards. But really, given the ongoing sort of issues in the global financial markets, plus the sort of tight sort of economy here as well, it will just be interesting to see how this sort of plays through. We can see it in the GDP figures for fourth quarter weren't particularly good. They were down 0.6. Now that's against the Reserve Bank sort of estimate. They were looking for a figure of around plus 0.7. And again, with no pause in the hikes, over the last sort of 12 months, it'll just be interesting to see, really how those sort of rate hikes sort of impact the economy. Because certainly it is benefiting a little bit from the sort of tourist spend, but that's starting to sort of wane a little bit now as we sort of, get close to sort of the end of daylight saving. But obviously we've still got a pretty major sort of labour shortage here in New Zealand. And all the time the clock is ticking now towards the election in October, and all the signs at present on the polls are pointing to a pretty tight election. With at the moment this sort of cost of living crisis being sort of front and centre. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.